Hello, everyone. Ladislas Moyes from the wanderinginvestor.com. So today I'm very happy to have Lyall Taylor on board to discuss a very hot topic, Russian equities. Lyall, how are you?
I'm very well, thanks. Yeah, thanks for having me back. Yeah, it's certainly a really interesting and eventful time in markets, and particularly in Russia. So yeah, happy to be here to talk about it.
So Lyall manages a fund, the LTCP Fund, based out of Singapore. He also runs a very good blog that I follow religiously called LT3000. All the details are below in the description. And he is invested in Russian stocks. And what has happened is that the RSX is down approximately even more than 35% since its peak in November. And we are seeing some very interesting valuations. So essentially, Lyall, is now the time to be buying Russian stocks?
I think so. I mean, there's never with investing, there's never any assurances about anything. There's only probabilities. But I think the risk reward is extraordinarily compelling at the moment. It's not necessarily just now either. I've been investing in Russia since 2014, and pretty much the entirety of that time, Russian stocks have been attractive to varying extents. And this is about the third, maybe even the fourth, certainly the third, like serious geopolitically driven sell-off that's happened during that period. But over that period, Russian stocks have nevertheless returned in the order of 20%, a year, including dividends. So Russia's often either the best performing or the worst performing market in the world. But what's actually happened is, despite those high returns, the stocks have just got cheaper and cheaper and cheaper, and we're now at the point where some of the valuations we're seeing are just like extraordinary. And now, what happens specifically with respect to current events remains to be seen. I'd say there's two scenarios. Either there's been a lot of talk about an invasion. What's actually happened so far is that has recognized the independence of the breakaway republics. If it kind of stops there, if they respect that we've seen some sanctions come through, but they're very, very mild. And I think, despite the fact that there was a lot of pushback to Biden saying that that's qualitatively different than a full-blown invasion, that actually is the working understanding amongst policymakers around the world. So we've seen some very, very mild sanctions. If it stops there, I would say it's very likely that Russian stocks have bottomed. If it continues on, they may go lower, and there are no assurances. But I do think the risk reward to be extremely attractive. And one thing maybe worth pointing out here is that, unlike what's happened in the past, right now the Russian economy is booming because oil prices are at $95, pushing $100 a barrel. The economy is doing great. The country is very well prepared for even much harsher sanctions that have already occurred. So in contrast to what happened in 2014, you're going to see record earnings and profitability this year. And if you take some of the oil companies, for instance, they were already very attractively priced not so long ago. They've dropped like something like a Rosneft. It was already trading at sort of a high fours PE at sort of $75 oil, paying out 50% of earnings. So it was already priced very, very attractively. It's dropped 30%. And the oil price has actually gone up 30%, and they benefit from the weaker ruble as well. So you're starting to get down to, 2 or 3 times earnings for fundamentally extremely sound companies. Things will have to go catastrophically wrong, and we can talk a bit about the risks. But I don't want to ramble on too much, so I'll let you ask a follow-up question.
So I completely understand in terms of the oil and gas stocks, they've been on a tear everywhere in the world except in Russia, one of the world's top oil producers. So the gap between Russian oil companies and the oil companies of other markets is just quite incredible. At the same time, will Europe be able and the US to completely sanction these companies, knowing that Europe is very dependent on Russian oil and gas? That's fairly doubtful. It's definitely priced in. So if it doesn't happen, there's all the upside. If it does happen, I'm not sure how much further downside there is actually.
Yeah. With all these geopolitically driven things, like, I mean, we mentioned in the last call that you need to look past the geopolitical headlines, right? And I probably should have cautioned people a bit more explicitly that Russia has historically been, a very volatile market. But ultimately, what ultimately what actually matters from the standpoint of an investor, politics and geopolitics is generally, markets and economies and businesses actually operate quite independently of politics most of the time. And for it to actually matter, it has to translate concretely into either a significant impact in earnings, right, that exceeds what's already priced in, or it has to extend to something like forced divestiture, right? So if we go through those two sort of things, like we mentioned on the last call, the fundamental problem is that Russia is too big to sanction from a energy perspective. They produce 11 million barrels of oil a day. So if you would actually sanction Russia's oil sector, like what has been done to Iran, for instance, you would actually be creating something akin to the 1970s OPEC oil embargo, right? And it's not as if the world is swimming in excess cheap energy at the moment. There's already an emerging energy crisis, natural gas shortage in Europe, and inflationary pressures around the world. And this has already been recognized. And so even under the more severe sanctions that are being discussed, really export-oriented sanctions are largely off the table at this stage. And they've talked about doing things like restricting imports of sensitive components and doing things like that. So I think the likelihood that there were sanctions on Russia's energy sector, or almost irrespective of what happens, is extremely small. And certainly the risk is far lower than what's priced in at present.
So I already owned a bunch of Russian energy equities, and yesterday I took this opportunity to buy Russian agricultural companies. Now, as an investor, I'm not worried about the macro landscape in Russia because, as you point out, the economy in Russia is, contrary to what most people believe, very strong because we seem to be headed into a commodities bull market. And when there's a commodities bull market, it's a party in Russia. My biggest risk, because I have been using a Western broker, actually IB, there's an affiliate link below. It's actually a good broker to buy Russian stocks. I'm worried that by holding my Russian stocks in the United States, that as part of a sanctions package, I would become a forced seller. This is what's keeping me up at night. So when I made these investments, the biggest risk in my mind is how Western governments will react. It is not the fundamentals of the Russian economy, nor the fundamentals of those companies.
Yep. And that's absolutely the right assessment. And I think I said in our last video that by far the largest risk, if you're a certain investor, particularly a Western investor, is exactly that. And I actually think that's often why markets react as violently as they do. It's not necessarily because people actually think the fundamentals are, that the company's actually going to be hurt a lot. It's that people fear this. So it's a difficult risk to fully assess. But there's two buckets, if you like. There's when there's a full-on sanctioning of a company, which basically means doing any sort of business in any way that pertains to this company is essentially forbidden, and then there's secondary sanctions and so forth. If that's the case, a lot of Western counterparties will refuse to allow you to transact in those stocks or even hold those stocks. But as we sort of mentioned, with respect to oil and gas companies, for instance, that sanctioning is a package deal, which would mean that people are not allowed to buy oil off these companies, etc. And that's just not a practicable thing to do. So the alternative is to do something akin to what the US did with Hong Kong, so certain Hong Kong and Chinese companies last year, where you sign an executive order where you prohibit investors from, US persons, say, from buying certain companies or holding certain companies. Now, the mechanism by which that's been done is typically to prohibit the purchase of assets on a certain date, and then have a forced divestiture requirement over, like, say, a 1 year lag or something of that nature. It typically would not be extended to all companies. I think what's far more likely is that they single out a handful of important systemic companies or something like that, and then they impose those kind of requirements. Now, what are the potential issues and the potential risks around this? I mean, one of the things to recognize is that there are also domestic buyers in Russia. Right? Well, a lot of people's intuition is that the market will only bottom when foreigners sort of come back. But like stocks are getting cheaper and cheaper and cheaper, right? And there's only so much foreign ownership and so much foreign selling that can come out. And Russia is running more than a 10% current account surplus now. And there's a steady increase in local ownership. It's a slow thing. It's going to take a long time to play out to a large degree. But increasingly, you'll just see larger and larger local participation. At some point, the stocks will actually catch a bid and will start to perform well just based on domestic ownership. So even in that kind of a scenario, particularly given how far valuations have already come down, it's not like you're going to lose 100%. I mean, and typically the impact is also very front loaded. We saw this with the Hong Kong stock when there were fears of this sort of thing happening and certain announcements. That's when the stocks bottomed, and then local buyers came in. Now it is a very silly policy because the primary victims of such a policy would not be Russia. You'd actually be enriching Russians, right? The primary victims are actually Western investors who are forced to sell at fire sale prices, and of course the buyers will be Russian. But that's, of course, no guarantee that they don't implement something like that. Look, I think it's in the worst case scenario, it could be done to a certain degree. I think the risks are much higher if you're a US person. You can mitigate the risk by focusing on, say, like oil and gas companies. You can try to have non-US counterparties, like have a sort of Russian broker or a certain diversity of counterparties, and don't concentrate at all in just one or two companies, especially one or two, like something like Sberbank is probably one that's explicitly at risk. If you own a cross section, they're probably not going to ban every single stock. They'll target certain companies they perceive as being close to the regime, and they just did that with a couple of very small banks that they say fund the US, the Russian military or something like that. But yeah, so I think it's a manageable risk. It is by far the largest risk, but I think it's one that can be managed. And it's always a case of assessing the risk relative to the return, right? So the returns on offer are potentially extraordinary, like given where valuations are at the moment. So I think it's a manageable risk.
A few months ago, when I started really buying Russian stocks, I contacted a few brokers in Russia and tried to open remotely. I couldn't find any broker that would be willing to open a brokerage account for me remotely in Russia in a way that was convenient. Half the time they'd be like, oh, you need a Russian number or something. Right. So I just didn't go through with it. But yes, next time I go to Russia, I will definitely want to open a brokerage account there and transfer all of my Russian stocks to Russia. I'll feel a lot safer this way. Yeah. And you say in terms of mitigating, a lot of Russian stocks have listings in London, in Vienna, in Germany. So those are potentially safer ways to play it rather than buying through a US brokerage. Maybe it's safer to buy through a European brokerage listed in Germany. Maybe the likelihood of sanctions hitting such a setup are lower.
Yeah,
I don't know what your thoughts are.
Potentially, I tend to think probably not to a large extent though, because a lot of these are depository receipts, and we saw with China Mobile and that were listed in the US, they were still affected by these kinds of restrictions. But yeah, maybe just to recapitulate, if we think in terms of probabilities, there has to be an escalation to the point that justifies very significant sanctions. Then the sanctions actually have to be implemented in a way, that targets all of these sorts of companies, and it has to be the case that the market reaction is significantly more negative than what's already been priced in. We've got companies trading at 20% dividend yields and 2 or 3 times earnings, when there's a large pool now of excess local savings with a very large current account surplus. So all of those three things kind of have to go wrong. And frankly, I find it implausible that some of these companies are going to fall to like one times earnings or something like that. The local buyers are going to step up. So I actually think even in the worst case scenario where everything is prohibited, you wouldn't necessarily take large losses from current levels. So I actually think the risk can be sized up, and it's actually not that significant. But yeah, I think probably your best bet is to get diversified counterparties, Russian counterparties. It helps a lot if you're not a US citizen, but it's not a risk. Like any risk, it's not a risk that you can completely escape.
How have you dealt with it for the fund that you manage?
Yeah, so our fund doesn't take US investors at the present time, which helps. So we haven't, for instance, been subject to the restrictions on owning certain Hong Kong Chinese companies that was implemented by under Trump's administration and has continued under Biden. So we just had to sign letters with our counterparties, sort of saying basically warranting that we don't have any US investors in the fund. But we also have a Russian counterparty broker and custodian as well. So some of the assets are held through Interactive Brokers, but we also have a local a relationship with Renaissance Capital as well. So that provides some diversity. I'm not even concerned about the risk of not being able to transact. That's fine at these kinds of valuations. What you want is to make sure that you have ideally have a custodian that will not force you to sell, so that we'll be willing to hold and custody those assets till things blow over.
So what are some of the stocks that, can you mention one or two stocks that you're looking at and why you find them interesting and what the valuations are?
Sure. So, I mean, it's pretty hard to find things not to like in Russia now. But one of the obvious things is just some of the oil stocks, like Rosneft, for instance, which I mentioned earlier. You know, it produces 4 million barrels a day of oil, basically. You know, and it's trading at something like a $60 billion market cap. You know, Aramco is like $2 trillion, right? And they do what, I don't know, about 10 or something like that. So this is, you know, it's now trading at spot oil. Like I was saying, the stock's was at high fours and it's dropped 30% when the oil price has gone up 30%. There might be a little bit of a short-term geopolitical premium in the oil price, but it's basically probably less than 3 times earnings now, and they pay out 50% of the earnings. It's a very good company. And the Russian oils generally have very low costs. They have excellent reserve replacement at very low cost and solid balance sheets and very good growth prospects. Like Rosneft's got a huge development project, the Vostok oil project, which could add like 2.5 million barrels to production. And you know they've sold down some minority stakes at valuations that imply that project alone is worth sort of in the high double-figure billions, 60, 70, 80, 90 billion dollars, and that was in a $60 oil world, right? This is, you know, and this is not even producing yet. It's being developed. So like there's just absolute extraordinary value. Gazprom is now trading at I would say probably below 2 times earnings, and again pays out 50%. So you actually, this is one of the things. Like a lot of people sort of say, okay, well the multiples are low, but you know, are you ever going to get any money out of Russia, etc.? Well, you are getting money out of Russia. They have an open capital account. They haven't, even through all these crises, they haven't imposed any sort of capital controls or anything like that. And the companies are now adopting increasingly Western best practice in terms of capital management. I mean, Gazprom's still obviously not an optimally managed company from a corporate governance standpoint, but they are paying out for 50% now. And again, it's worth reiterating that right now, these companies are benefiting hugely from everything that's going on because all commodity prices have gone through the roof and ruble's gone down. So their costs are going down and their revenues are going up. And so these companies are basically earning record profits at a time when the stocks have basically been given away at fire sale levels. So I think anything in the oil and gas space and Gazprom, also not a great deal of sanction risk as we discussed. I think Sberbank is also very attractive, 3.5 times earnings. Extraordinarily well-run company. You know, there's more sanction risk there, but I think relative to where it's trading, it's very, very attractive. So those are a few things.
And they've had time to prepare.
Yeah.
Is there anything else you'd like to add?
Yeah, I thought just it'd be worth maybe commenting a little bit about this, specifically what's been happening, or where we're at with this situation at Donbass, because obviously it's very important. Things are changing every day, so we'll see how things play out. But basically, Russia has recognized the independence of the breakaway republics. But what I think is really important is that they haven't annexed those republics, and I think that's actually a very positive thing. But the main source of uncertainty now is how the borders are going to be defined, because if they're defined by the current de facto control, then I think we're pretty much at the end of the crisis, and I think it's very likely that the market's going to be has probably already bottomed or is very close to it. But if there's any sort of dispute about where the borders are, there is scope there for sort of renewed conflict and tensions, and there are some scenarios there where things could get worse. So we'll have to see how that plays out. I think the scenario that some people have talked about of a full invasion of the Ukraine and extending all the way to Kiev, etc., is in my opinion a very remote possibility. I don't think Putin's fairly pragmatic. I don't think he needs to do something that extreme to achieve his objectives. He certainly hasn't been preparing the local population in Russia for something like that, and I think would be very, very unpopular. So so that's the current state of affairs, and we'll see how things evolve from here.
Yeah, thank you, Lyall. And for people who will call me pro-Russian for saying that I'm buying Russian equities, I'm actually making a real estate investment in Kyiv as we speak. So I'm personally using this opportunity to invest in both sides.
Maybe if I could just say very briefly there too, because obviously there's a much higher degree of geopolitical risk in these kind of regions, but there are different types of risk, right? And there's also valuation risk as well as geopolitical risk. And I think if you're getting something like 20% yields in Ukraine, or the choice between that and say 2% yields in Sydney, I would say that the valuation risk vastly exceeds the geopolitical risk, and I think that's also the case with stocks. And I've had 30% of my money in Russia, and more than 10% also in other CIS markets, including Kazakhstan. I've actually outperformed the S&P 500 this year, and we're up 30% last year. So there are different types of risk, much higher geopolitical risk in these places, but much lower valuation risk and a very significant upside if things work out. So
thank you very much, Lyall. So obviously none of this was investment advice at all, because Russian stocks are very volatile, and obviously do your own due diligence. But Lyall, where can people find out more about you and your services?
Sure. And thanks again for having me. So basically, I run a blog, as you mentioned. I'm fairly active on Twitter. I don't blog that often, but I do still occasionally. And incidentally, I recently wrote a very long article on Russia. So if people, we didn't talk a whole lot about the sort of geopolitical aspects in the background on this call, but if people are interested in that, I have written a long article. If people are interested in contacting me, probably the best way is via email, just lyall.taylor@swissasia-group.com. And the fund is open for subscription to accredited investors who are non-US citizens. We may open it to the US at some point, but at the present time, we have not. So that's probably the best way to reach out.
Cool, fantastic. So Lyall's email, Twitter, and blog are mentioned below in the description. So Lyall, always a pleasure, and thank you very much for your time today.
Very welcome.
Cheers.
Thanks,